Hi, I'm in Zurich today. Let's talk about cost of finance and one major driver of the finance cost remaining today. We've done a lot of automation in finance, but we've used labor arbitrage in many organizations to lower the cost of finance. We've outsourced activities that were low value add activities to service providers. There's one area though that I think is a major cost driver. Perhaps it could be a third of the cost of some finance organizations, is still around reconciliation. Reconciliation is a process of comparing and testing two master files or master files against transactions to see that they contain the right balances, to see that they agree. If we have disparate data supply chains, it creates the need for reconciliation. Often our reconciliation is not a one-for-one reconciliation. When you reconcile a bank account against checks to see that the bank kept track of your checks appropriately, you're reconciling at the same level of detail. You know the checks, they know the checks, you know the deposits, they know the deposits. You're comparing those, and so if there's something that mismatches on the balance level, you're falling back to the transactions, individual transactions, to compare those. Often though our data supply chains aren't built, we don't have duplicate data supply chains at the same level of detail. That would truly be foolish. One data supply chain is at one level and the different data supply chain is at a different level, but they can be aggregated in some way to test that they're equal at some level. Well, that process of the aggregation, that can be automated. The process of comparison at an aggregated level, that can be automated. But the problem is when there's a breakage, when one balance doesn't match another balance, the process of drilling down to the detail often cannot be automated because the data supply chain doesn't contain the common detail in both instances. So now it's a much more complex task of finding the detail, of guessing at what the detail might be in the other data supply chain and determining what didn't reconcile, what was the cause of the difference between these two. And the fix for this process is not often to go update the master file. The fix for that is to make an adjustment. All of those steps of when there's a breakage through to the adjustment process is not something that we can fully automate. And that's why much of the existing work that we do around this space is something we will never be able to fully automate. But reconciliation can be eliminated. Eliminating reconciliation is to use the concepts we've talked about of lowering the level of detail in a data supply chain, using step-up concepts in order to have the common portions recognized across different data supply chains. Those kind of concepts can be used in order to create a consolidated data supply chain, which by its nature eliminates reconciliation. This is a step we're going to have to take because we won't be able to fully reconcile or fully automate reconciliation. To drive the cost of finance lower, we're going to have to eliminate reconciliation. The sooner we get to working on that, the sooner we'll be at truly lowering the cost of finance in a large measure across an existing set of processes that won't be eliminated in any other way.